Thank you, Mr. Chairman. I appreciate the opportunity to visit with our panelists today. And I also appreciate the opportunity to follow a couple of my colleagues off the Science Committee. In her March testimony before this committee, Secretary Yellen highlighted, following along on these lines, that climate change is a top priority for the Biden administration, and that regulators should be assessing risk to financial institutions. As any regulator who's appeared before this committee for the last 26 years knows, the 3rd Congressional District of Oklahoma, which I have the proud privilege of representing, is a commodity-driven economy centered on agriculture, centered on energy. So the actions of the Fed, FDIC, OCC have a real and significant impact on the businesses in my district. We're capital intensive. We have to have major resources to do the kind of amazing things we do. So I start with Acting Comptroller Sue. In your testimony, you explain that the OCC will act on the climate issue, a risk, with a sense of urgency. Can you describe to me the ways in which addressing climate risk could manifest themselves in your supervisory and regulatory requirements? What's coming towards my constituents?
Could the witness suspend? Could the witness suspend?
Absolutely.
Mr. Lucas, could you turn your camera on under the House rules?
Sorry, Mr. Chairman, and I apologize for that. I thought I had it on.
All right.
Sorry, Mr. Chairman.
The witness may proceed. Thank you.
Apologies. So different financial institutions will be exposed to climate risk differently. And what we want to ensure is that they are appropriately, that they've got the risk, they know what their risks are. And so in some cases, that there will be a lot, in some cases there will be a little. It really depends. And some of these are physical risks, and some of these are what they call transition risks. That what was highlighted earlier, these are real things, and we just want to make sure that that banks are identifying those and measuring those appropriately, not with a desire or an eye towards putting the thumbs on the scales for different industries.
But how you identify those risks, how you put your thumb on the scale, all regulators, has a dramatic effect on the cost and availability of capital. We can drive capital decisions in this country away from very successful, ever more efficient, environmentally conducting themselves sectors by how we do this. I've watched this before. So that's why I asked my question, and I ask all of you to be very careful in what you do. The goal is not to use financial regulation to create someone's version of the world. The goal is to assess the risks so that the market economy can incorporate the demand from the public for a cleaner environment and proceed in that direction. Just an observation from someone who's mildly sensitive about the effects of the federal government on his constituents going back to the 1930s. Next question. Some sectors of the U.S. economy are seeing a surge in consumer prices. It's a result of high demand outpacing supply. This could be temporary, or these price pressures could continue to build. Vice Chairman Quarles, in September of last year, a market survey conducted by the Federal Reserve Bank of New York showed that less than 25% of the respondents cited inflation as a risk for economic stability. If we were to do that survey right now, do you suspect the results might be a little different? And I come at this as a person who was in college in the late 70s and early 80s, who was starting to farm, who went through that inflationary period. If you're under 40, you don't remember how bad it can be. Touch on that for a moment, if you would, Mr. Vice Chairman.
It's kind of you to implicate in any way that I might be under 40.
Absolutely.
I do remember that heavy inflation. I think I wouldn't want to speculate on what a poll currently would say, but I will say that we do expect to see inflationary pressures over the course probably of the next year, certainly over the coming months. I think that our best analysis is that those pressures will be temporary, even if significant. But if they turn out not to be, we do have the ability to respond to them.
I just remember the vicious correction that went on in the early 1980s as the economy picked up and the velocity of the economy increased and the dramatic expansion of the monetary supply. We've only put, what, $8 trillion extra money into the economy in the last year and a half? You have to survive whatever comes. Yield back the balance of my time, Mr. Chairman.